Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, May 24th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Expecting more of the same today. We've been in a quiet uptrending mode here ever since pushing back above 76.5. We've quietly pushed up toward the upper edge of this range, which is 24.04.5. And that's likely going to persist here as the market continues to push toward the Memorial Day holiday here in the United States. You'll likely see the volatility and the volumes kind of dry up a little bit, and you'll see this thing quietly push higher. That's just par for the course, what normally happens. Once price gets to the edge, there could be an opportunity to fade it back down, as this is likely the new key range here where the market's going to do business in the next several weeks. Eventually, we may see an upward break through the top of this range, which would be through 24.04.5. That would take us into the next upside targets. But until that occurs, it could be a fade the edges type of trading range. So right now, short term could be a quiet move higher. We do have crude oil inventories later on today and FOMC meeting minutes, and that could provide a little bit of volatility later on today. If we look at in the intraday time frame of the ES, here it is. On an intraday basis right now, again, we're holding right inside the previous session's range. Previous session's highs right here. We're inside that range. Previous session's lows down here. And so we've traded a very, very narrow range today. For the most part, this range is about four and a half handles wide. So we're likely going to test both sides of the range. We may see price drop first, test the lower edge of the range, and then push to the new highs. We may see price push above 2400 and then come down. But anytime you have a narrow range, this narrow going into RTH, the expectation is you test both sides of the range. So look to fade the edges with an upward bias. Here's a look at crude oil. Crude oil has continued to trend higher, has reached close to 52s now. If we take a look at the higher time frame chart, you'll notice that this has been very, very bullish ever since the low at the 43.76. This price has continued pushing higher. It got to our high probability target zone and is now pushed through it and is nearly gotten into that 52 level, reaching a high of 51.88. I mentioned before that any pullback into 49.80 to 50 could offer an opportunity to defend and squeeze toward the upper edge of the range, which is 53.75. So we could be looking at more strength ahead toward this target as long as bulls keep 49.80 to 50 bid. Any break or failure to hold that level on a pullback opens up a return back toward recent lows. So right now still trending up, pullback still to be defended until proven otherwise. And if we look at the intraday time frame right now, again, nothing super actionable at the moment. We're just in an uptrending structure. We do have clear support off of 40. Even here, 35, so 51.35 to 51.40 is showing some support. That tells you that bulls are currently positioned there. It also tells you that there are some sell stops below. So any failure to hold 51.40 could open up a move back toward 5-day VPOC on a short-term basis. But overall, this thing continues to trend up, so pullback's likely to be defended even as low as that 50.90 here, where that LVN is. So any pullback could still be a buying opportunity for crude oil here. Now let's take a look at gold futures. Gold right now in the higher time frame shows that price got into the 63s. We got a retest up there and price has pulled back. So far we're still holding in a range here after the recent squeeze. We're seeing a little bit of digestion of this price. And now as long as the price continues to hold 1245s, the expectation is we could see one more move higher into 1280. So far, this has been the key level to watch. Any failure to hold that level auctions back toward 1232s and perhaps even lower. So right now, still in the range, looking for bulls to defend 1145s for a potential squeeze through 1263 and into 1280 at some point over the next several days. All right, let's take a look here lastly at the NQ, still with a very bullish uptrending structure. We got a quick 2-day pullback here that has set and defined the edges. Those edges now could be used for fading opportunities as the price looks to continue to create balance within this range. You can see a little bit of an HPN developing. So we will likely see more back and forth trading range activity with an upward bias. At some point, we may see this thing break to the upside. May not occur this week, so the first push to 57.25, perhaps 57.30, maybe even 57.50, could provide a trap in that area for a fade back down. At some point, we will see upward expansion and start to push to the upside targets. 59.04 would be the next key target above to reach, but right now we could be range bound until then. On an intraday basis right now, NQ currently holding near the highs here, pushing right into the previous session's high at 18.5, and at the moment, not really finding a whole lot of acceptance just yet. That could lead to a little bit of a return back toward 57.03, which is closing V back yesterday, and perhaps even as low as 56.95. But overall, any pullback still a buying opportunity as this thing attempts to push higher into the top of that key range, 57.27. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.